Despite recent market volatility, AI stocks continue to be on a hot streak, but pure play AI companies are only one way to play the story. As the revolution unfolds, some of the biggest winners are going to be the companies enabling the nuts and bolts for AI infrastructure. We're talking about the companies that lay the fiber for connections, the ones that assemble the necessary hardware, and perhaps most important, the companies that store the data that AI actually runs on. Today, I invite you to think about stocks beyond Nvidia, to explore three stocks also benefiting from AI. They may actually have more upside potential. One just had a record-breaking quarter, blowing away estimates. Another is on an earnings hot streak with 12 straight earnings beats and ready for more. And the last one is a name you may already know, but the business is now completely different from what you remember, and that spells serious upside potential for investors in the months ahead. By the way, I'm Steve Reitmeister, but my friends call me Righty. I spent nearly 20 years the editor-in-chief of Zacks.com, and today I'm a partner at WallStreetZen, where every day our quant model analyzes over 4,600 stocks against 115 different factors to find the ones most likely to outperform. And yes, every pick in this video came out of that system with flying colors. If stock reviews like this are useful to you, then do me a quick favor and hit that like button. It tells the algorithm to put more videos like this in front of you instead of the usual hype and BS. All right, one last word before we get any further along. Investing always carries risk, including the risk of loss. Always do your own due diligence before putting real money to work. Okay, time for that first stock pick. Let's start by going underground, literally, with our first stock, talking about Dycom with the symbol of DY. Let me explain. Before a GPU can do anything useful, the data center it is in has to be connected to the world. We're talking about thousands of miles of fiber optic cable. Someone has to put that fiber in the ground. And yeah, more often than not, that someone is Dycom. They're a specialty construction company that builds and installs the network infrastructure that telecom carriers and the big hyperscalers depend on. The companies building AI data centers have a huge problem. The existing infrastructure doesn't cut it when it comes to AI because it wasn't built for it. So the hyperscalers are doing the only thing they can. They're building entirely new networks from scratch. This no doubt explains why the largest cloud players collectively raised their capital spending plans by 77% this year to roughly $725 billion. A meaningful chunk of that money is going to go into physical work of laying fiber and connecting sites. Dycom is one of the few contractors operating at scale for these kind of projects. All right, the company's most recent quarterly report proves out the success of this business model. Earnings more than doubled year over year, which blew away Wall Street expectations. Even better, management raises outlook for the rest of the year, a sign they expect the good times to continue. Just to be clear, this is not a one-quarter phenomenon. That's because Dycom is now on a 9-quarter earnings beat streak. So what does Wall Street think? Analysts are unanimously bullish, with all 8 recommendations coming in as a strong buy. To be clear, not just buy, but actually strong buy recommendations. The fair value forecasts are nicely above the current price. The street high is calling for 40% upside for shares in the coming year. That may prove light if they keep up those earnings beats. Now, it's time to look at the fundamentals from the vantage point of our Zen rating system. Dycom earns an A rating, which means a strong buy recommendation. That's because it ranks in the top 4% of all stocks we track. The Zen ratings breaks every stock down into 7 component grades, so you can see exactly where the strength is coming from. For Dycom, growth lands in the top 5% of all stocks. This is about the consistency of earnings, which no doubt harkens back to the recent streak of 9 straight beats. And sentiment scores in the top 3% of stocks as well. This is a measure of what the smart money thinks of the stock. Often a good idea to follow their lead. Now, there's some softness in the component grades. Value and safety are kind of middle of the pack scores. However, when you put it all together, there is a very bullish thesis for Dycom. That's because every dollar of that AI infrastructure boom that goes into physical network build-out flows towards the companies doing the work, and Dycom is one of the few doing it at real scale. That growth party looks far from over, which likely points to much more share price upside ahead. By the way, if you want to explore more great stock ideas with me live, then you have an opportunity to do so this Monday at 7 p.m. Eastern Time. Registration is free. Just use the link on the screen, and I look forward to seeing you on Monday. The idea behind the next stock is simple. Once the data is connected, someone has to actually build the machines. This brings us to our second stock in Benchmark Electronics with a symbol of BHE. Benchmark is what's called a contract manufacturer. So when a company designs a complex piece of electronics, like the systems that go inside data centers, they usually don't build it themselves. They hand the design to a company like Benchmark that physically builds it out for them. These are the hands that assemble the hardware the AI build-out actually runs on. And here's why that matters more than ever right now. Benchmark has a whole division built around advanced computing and AI hardware. And on their most recent earnings call, management pointed to high-performance computing and cluster clustered AI systems as their new exciting growth drivers. A big piece of that is liquid cooling. As AI servers get denser and run hotter, keeping them from overheating has become one of the hardest problems in the data center. Benchmark builds the hardware that solves that cooling problem. Demand is running so hot that the company just dramatically raises revenue outlook for the year ahead. Now, here's a big reason why Benchmark caught my eye and made this stock list. It is quietly one of the most consistent operators in this entire space. Now, Benchmark has beaten Wall Street earnings estimates for 12 quarters in a row. After these beats, analysts typically raise expectations for the future, and they top that raise bar once again. So this is truly impressive earnings momentum that shows no signs of slowing. Our Zen rating system is picking up on the operational excellence for Benchmark with an elite A rating. It's also the #1 rated stock in the electronic component industry out of 34 companies we track. The component grade profile is strong across both financials and sentiment, rank in the top 20% of all stocks. Then we have growth and safety ranking the top 10% of stocks we analyze. But the standout grade is momentum, which sits in the top 3% of all stocks. This is a measure of beneficial price action, which gladly points to more upside ahead. Like Isaac Newton said, a body in motion stays in motion. By the way, the Zen ratings are updated every weekday. So to get the latest ratings and research on this stock or any stock, then visit the quote pages on WallStreetZen.com. The bottom line on Benchmark is this. You've got a company building the actual hardware of the AI buildout. 3 straight years of beating expectations and the #1 rated stock in its industry, and a quant profile that's strong across the board. Add it all up and you have a stock that is enjoying tremendous earnings momentum that typically leads to a thriving share price. If you're getting value from this stock analysis, then do yourself a favor and hit subscribe and turn on the notification bell. That's because I put out data-driven videos like this every week, and the little bell is what ensures you will see the next one. All right, let's move on to our last stock. As I shared earlier, this is a name that most of you will probably recognize, and we're talking about SanDisk with the symbol of SNDK. Okay, you might think I'm insane for including a stock that's already run up so much in the past year, as in how much higher could it actually go? Well, there's something important about this stock that you might not realize. When you think about SanDisk, you probably think back to previous years when it was just flash drives and memory cards. But the SanDisk of today is something completely different. After splitting off from Western Digital into its own standalone company, SanDisk is now a pure play on high-performance flash storage. And that puts it right at the center of a thriving part of the AI story that most people are completely overlooking. AI doesn't only run on processing power, it runs on memory too. Before a model can answer a single question, it has to be trained on a staggering amount of data, and that data has to be stored somewhere it can be reached at enormous speed. Then every time the model runs, it's constantly reading and writing information. None of that happens on the GPU alone. It happens on fast, dense flash storage, deployed in quantities most people never imagined. That's SanDisk's market, and demand for it is surging right alongside everything else in the AI build-up. I'm just saying, this is a stock you'd already know about if you've been attending my weekly live training sessions every Monday evening. I don't just talk about top stocks and industries. I share how I'm finding them to enable you to do it yourself in the future. I also share my handpicked trade of the week, harnessing the awesome power of the Zen ratings model combined with my greater than 40 years of investing experience. All this and more is part of our live training session this coming Monday at 7 p.m. Eastern Time. It's totally free. Just sign up at WallStreetZen.com/live. You'll also find a link in the description or scan the QR code on your screen. Look forward to seeing you on Monday. Let's bring it back to SanDisk and take a close look at the numbers. SanDisk revenue is forecast to grow nearly 58% per year going forward, and earnings are forecast to grow even faster than that. This is not a small company. Revenue this past year came in at over $13 billion, so a 58% increase is truly mind-blowing, meaning that SanDisk is one of the fastest growing companies in the entire data center supply chain right now. Wall Street is loving this growth story. This includes 10 strong buy recommendations and another 5 at buy. The funny thing is watching analysts trip over themselves, gushing about their love for this stock. Almost every day brings a new analyst touting an even higher price target. The street high right now is $32.50, which is over 60% above current levels. Not surprisingly, our Zen rating system thinks highly of SanDisk as well, leading to an A rating because the overall fundamental profile is in the top 2% of all stocks we track. The component grade tells a clear story of how exceptional this stock truly is. Momentum lands in the top 10% of all stocks. Then you have top 5% for both growth and sentiment. Financials is a notch higher in the top 4% given their impressive operational metrics. The one weak spot is safety. That's because the extra volatility comes into play for a cyclical company like SanDisk. But that volatility can also lead to explosive upside. And yes, the stock has already run up quite a bit in the past year, but this is because of the impressive growth, which shows no signs of slowing. In fact, the company is already locking in end contracts to supply storage in the years ahead, meaning that SanDisk is riding out one of the most impressive memory cycles in history. And with AI showing no signs of slowing, same goes for the upside potential on their earnings growth, and therefore same goes for the upside potential of their share price. This is exactly why SanDisk is part of my Zen Investor newsletter portfolio, where I handpicked the 20 best stocks for the long haul. There you have it. 3 ways to play the AI revolution that aren't just Nvidia. Now I want to hear from you guys. Which of these 3 stocks is your favorite and why? Or are there any data center tickers you have your eye on that I didn't cover here today? Let me know down in the comment section below, and don't forget to join my live training session on Monday. If you're interested in another high-tech theme, then I suggest you check out the video that's popping up on your screen right now. In that one, I cover my top 3 quantum stocks that you can get for under $30 per share.